property expert under the sun says the same thing. Don't buy apartments. But is this leaving them with a blind eye to a great investment opportunity out there at the moment? Here is a fact. Apartments are doing better than houses in just about every single capital in Australia at the moment. In this video, I'm going to show you the data breadcrumbs as to why this trend is likely to continue for the next few years yet. Specifically, I'm going to go through a technical point about replacement costs and why it's going to drive down supply levels over the years ahead. I'm also going to go through the value apartments show today versus history and why people are flocking over to them at the moment. And lastly, I'm going to talk about the affordability concept and how there's a flight to affordability and apartments benefit from that. If you're interested in my thoughts, definitely keep watching. Hi, I'm Reedham Sayed, founder of Confidence Finance and 6 times top 100 mortgage broker here in Australia. So let's get into it. So the first thing here is a table of something called replacement costs. Bit of a technical term, but what it's really showing is how much does it cost to build an apartment in different capitals? What is the total cost base of an actual apartment? So if you look at Sydney, it's about $8,500 a square metre. Melbourne, $7,300, and in Canberra, Hobart, Brisbane, roughly around that $6,000 to $6,500 mark, and a little bit lower in Perth and Adelaide. Here's the problem, and underlying this is the cost it takes to build an apartment. Now, if people are selling apartments for $8,500 in Sydney, how much is it costing developers to actually build these apartments? This is where a little bit of number crunching shows that building apartments is not actually all that feasible, even in Sydney at the moment. If it's not feasible in Sydney, it's got no chance in some of these other capitals. So what is the cost of building an apartment? We've ran some numbers on a few different developments and tracked it with a quantity surveying website that measures the cost of building an apartment. And here you've got indexes ranging between $4,000 to $5,000 per square metre to build a brand new apartment. There's obviously a whole lot of other costs attached to that as well. You've got to pay for the land, you've got to pay stamp duty, you've got to pay interest, you've got to pay everything it takes to actually build. But the cost of construction alone is $3,000, $4,000, $5,000 to build an apartment, but they only sell for $5,000, $6,000, $7,000. This gap between what they sell for and what they cost to build is very, very close, which means that there's no developer profit available to go and build apartments. This is weighing down in approvals data, and it's in the data. People are not getting approvals to build apartments, and that means they're not going to start them and they're not going to build them, which adds further housing supply issues into the apartment market. Simply, they're not feasible to build in many capitals, and even in Sydney, in the affordable segments of Sydney, it's not a feasible investment for a developer to make. That's going to reduce supply, and that's going to put upward pressure on existing apartments over the next few years. They say that supply is the enemy of capital growth, and with apartments, not much supply is available at the moment, and not much supply is going to be coming online when these are what the developer spreadsheets look like. The second reason why apartments are doing really well is value. Check this out. This is the spread in the price between a house and an apartment. That is, how much of a premium do you have to pay if you want to go buy a house? Now, if you look at the premium for combined capitals, look at this chart. It is out of this world. Out there at the moment, we have a 45% premium to buy a house. It is the highest it's ever been by double. That's crazy. So many people post-COVID flocked to the idea of space. That's why they started paying premiums to go and buy houses. And now there's such a big value gap between houses and apartments where the spread in the cost of the two is larger than it's ever been before. These things don't last. More and more house owners are going to be priced out, and they're going to be like, hang on, apartments look really, really cheap in comparison. And that spread is going to normalize back closer to something that history shows us. That spread was 10 to 20% throughout the last 20 years, and now it's 45%. I'm not saying it's going to go back to 10 to 20%, but this spread, this is an outlier situation that is not going to last indefinitely. And finally, with an interlinked reason, is affordability. Let's check this out. What is actually happening on the ground in the housing market? This is pretty recent data from CoreLogic that measure house price change in different capitals and break it up into different segments. How are the top quartile homes doing? The rich people homes in a certain capital, how are they performing? And how are the more affordable segments performing? Generally, there's this old adage in property investing is buy blue chip, buy those expensive premium areas. That I think has been debunked in 2024. You can buy affordable assets that grow at the same rates, and that means that affordable housing can do really, really well for property investors. In fact, right now, affordable housing is driving house price growth in every capital in Australia. In Sydney specifically, the upper end is doing pretty poorly at the moment, and the affordable end is doing really, really well. You'd expect to see this in a situation like we're in at the moment. The macro is, we're in a cost of living crisis, mortgage rates are really high, borrowing powers are down. What does that leave people to actually go and buy? They can't be buying $2 million houses because they can't afford them. So they're being trickled down into lower areas as a result, and you're seeing that in the data. Here are the words that they use. Almost every capital city is recording stronger growth conditions across the lower value range of the market. So this is where apartments sit. Apartments are more affordable than houses. We just showed that in the previous chart. There's a big difference in the median price of a house and an apartment. They are at the affordable end. So there you have it. You have replacement costs showing a big supply problem right now that is not going to get fixed anytime soon, that suggests apartment approvals are going to continue to be weak, particularly in a range of these capitals where apartment prices are fairly low, and you have value there at the moment, and you also have the flight to affordability. This is why the data is showing on CoreLogic as of today that apartments are doing better than houses in every single capital, and I'm going even further. That trend is set to continue. So this leads you to ask a question. Should I buy an apartment? I think the answer to this is keep an open mind. If you want short-term growth, which is a really powerful way to boost your portfolio, and you're okay to buying value, then buying an apartment could make a lot of sense. It could be a powerful mix to add to your property portfolio to help you grow. And if you don't have any at the moment, it is a little bit of diversification and getting another opportunity into your property portfolio. For those younger Australians and those with smaller budgets, it also offers you a chance to buy in a better quality area that grows more over time because you're finding value in the market. Apartments are where value is at the moment, and you shouldn't close the door to them just because everyone says so.